In Part 8 of Module 10 on Budgeting and Sustainability, we'll discuss license fees, corporate income taxes, and severance taxes. License fees are collected by state governments for a variety of activities. States collect license fees from businesses and individuals who incorporate within their borders. Businesses usually identify states with low incorporation fees, for example, Delaware and Nevada charge minimal fees, to reduce their costs of operation. Fees may also be collected for use permits for hunting and recreation in state parks. License fees are the third largest source of revenue for states in total. Regarding sustainability, license fees can be used to encourage certain types of business and recreational behavior deemed beneficial to states and communities. At other times, license fees may drive away business development needed for sustainable economies or encourage overuse of state recreational areas, producing environmental degradation. Fees associated with water use and recreation are of importance in this regard, and many sustainability efforts are aimed at the strategic imposition of fees that promote the conservation of natural resources. Corporate income taxes are another important source of state revenue. Business development and retention is a key element in the developing of sustainable economic base. Businesses provide jobs to individuals, which in turn help finance other aspects of local economies. Businesses also contribute to other forms of state revenue, such as license fees. In order to attract and retain businesses, state corporate income tax rates must be competitive with other states and communities. If tax rates are too high, corporations might find it more lucrative to relocate their corporate offices and manufacturing facilities elsewhere. In many cases, corporations find overseas locations more economically beneficial because corporate income tax rates typically are very low. Most American states that have corporate income taxes impose flat rates. A flat tax is a single rate regardless of income level. Severance taxes are tax payments imposed on the extraction of natural resources. States own subsurface mineral rights, some own forest lands, and many protect fish runs through their ownership of surface waters. When natural resources are extracted through activities such as mining, timber harvesting, or fishing, the states can collect excise taxes on earnings derived from those activities. From a rights-based perspective, the state collects on resources that technically belong to all citizens. The tax money collected represents a portion of the price the state is charging extractors for the resource. Viewed in that way, severance tax illustrates the very low price private enterprise pays for the rights to natural resources. High quality, well-protected, and readily accessible natural resources are key factors in maintaining sustainable states and local communities in many areas of the country. Unless the resources in question are renewable, the extraction of resources could represent a decline in sustainability potential. Technically, fisheries and timber are renewable resources, but due to restraints on habitat and aggressive timber harvesting, these natural resources require the collective aid of humankind and the power of government regulation and planning in order to retain or regain levels of sustainability. Additionally, the viability of plant and animal communities may be compromised during the process of resource extraction by mining, fishing, and timber harvesting. In Northern Spotted Owl v. Hodel, 1988, U.S. District Court Judge Thomas Zilli decided in favor of the preservation of an endangered species over the continuation of intensive timber harvesting, particularly old-growth timber. The case illustrates a governmental commitment to sustainability and the active pursuit of social and environmental justice through governmental action. The court's interpretation of the Endangered Species Act, as seen in the Spotted Owl decision, dictates that those extracting natural resources must consider more than profits and wants in the context of a broader view of ecological sustainability, not solely constructed as a zero-sum game in which the natural environment loses while human society gains. Severance taxes go a small way towards the recognition of the environmental loss associated with many forms of resource extraction. Additionally, the taxes levied in this area raise the price of resources extracted, accounting for the hidden costs associated with the reduction of environmental degradation and reducing the demand for non-renewable natural resources. In Part 9 of Module 10 on budgeting and sustainability, we'll discuss revenue, past and future.